Hey guys, welcome back. Happy New Year. My name is Adam. I'm the editor-in-chief of The Fifth Person, and today we have a brand new roundtable discussion for you. So to my left is Victor.
Hi everyone.
And right across me, I have Rusmin
Hello,
and
everyone.
Kenny.
Hello.
So welcome guys. And today we're going to talk about Alibaba. So recently, Alibaba's share price has come down from a high of about 320 in October to about 210 and has rebounded a little bit over the last week or so. But we want to find out what happened to Alibaba and whether there's an opportunity to have a look at that stock. So today we're going to have a discussion among all of us here, and we'll share our ideas and opinions with you. So guys, what happened? What caused Alibaba's share price to come down over the past couple of months?
Well, I guess it's because Xi Jinping was sitting and was reading a speech about what the comment that Jack Ma made during a speech, right? And he was saying that the Chinese government is actually stifling innovation by tightening regulations. So I think that caught his attention, and he personally told the regulators to stop the IPO.
Way too political. So basically, what happened in the forum? Basically, Jack Ma was speaking on the public forum, and he basically kind of like criticized the financial regulators, saying that financial regulator in China kind of like having a pawn shop mentality when it comes to lending money to the business. Because one thing that Alibaba owns is the Ant Group, right? And they do business, they lend business to a lot of micro loans to a lot of consumers that doesn't have any collateral with them. Okay, so and that kind of like works very well for them, but because of that, I think he made a lot of money from Ant Group, and then the day before, prior to the listing of Ant Group, he kind of comment and criticize this financial regulators.
He only criticized that, he also criticized the Basel regulation, saying that it's all about looking at the risk but instead of development. But that's precisely what the Basel is for, right? Is to reduce the risk. And if you don't have always have the risk mentality down there to make sure that you safeguard the bottom, right? And only always looking at growth, right? Then that's where you get the whole banks will collapse and will shake the whole world. Because I think he dared to say that because Ant Group only have about 2% of the whole financial product under their balance sheet, and the rest of 98% is under the other financial institution.
So basically, the Chinese government stepped in to make sure that there wouldn't be a subprime part 2 in China.
Yes.
Right?
Yeah.
So that's what happened with Ant Group. That's why the IPO was pulled, and they're doing some like regulations to make sure that this is a bit more safe.
Well,
so that's what happened with.
in a way, other people are saying that China just want to let Jack Ma, who is the boss.
Know who's boss, right?
We all know who's the boss.
We all know who's the boss. So he basically ran his mouth, and I mean he shouldn't have.
But I mean, how can you have borrow money without collateral? That's what he's trying to say. He said collateral is it's not good. You should look at
That's
the
still
development.
the backbone of the whole economy. So they can't let it go.
Okay, so that happened, and that caused Alibaba's. If you look at the chart, that caused the
price to
drop. The price to drop.
Ant Group got suspended. I think we all know that news, right?
I mean, we covered Ant in the earlier roundtable as well. Do check it out. I think we have a lot of good information about that IPO at that point in time. So we don't know when the IPO is going to happen again. But that caused Alibaba's share price to drop. Then there was another dip.
So
recently.
following that, there was a news that regulators actually came out to tell Ant Group to return to its base, which is just to focus on their digital payment services. So that actually affected the company big time, especially when Alibaba owns about 33% stake in the business. So that caused the second tumble in the share price. Following that, there's also another thing where the government is opening an investigation and looking into Alibaba for any antitrust kind of breach.
So tell me more about the antitrust. What happened there?
So basically, they didn't like the Alibaba's practice of having exclusivity with merchants, right? When they list on Alibaba, they cannot list on any other platforms. So that could be a problem. So then they're still in the midst of doing the investigation, so we do not know what other stuff might come out of it. So as of right now, we know that they will be fined about 10% of their revenue if
up to 10%.
Up to 10% of their revenue. Yes, that's right.
So basically, what Kenny is saying is that if you are early merchants of Tmall, because Alibaba is one of the earliest players there, they kind of like sign an agreement with Alibaba to only sell their products on the Tmall platform. Right. So that kind of exclusive arrangement in a way that is a monopolistic behavior. So the government, the regulator, basically saying that you can't do that. Right, because they want an open market, open platform where if the merchant lists it on Tmall, they can also list it on JD.com and elsewhere. Right. So this is exactly what's happening in the market. Yeah.
So to talk about the impact is that if you go to the third quarter earning transcript of Pinduoduo, which is their competitor, I think the second largest e-com competitor in China.
Which is backed by Tencent.
Yeah, backed by Tencent. Okay. So according to Pinduoduo third quarter earnings cost transcript by David Liu, right, which is their vice president of strategy, he actually mentioned there's this dominant merchants, right, intensify the whole competition environment, right, and there's an exclusive agreement that have been signed. They say that there's about 1,000 brands to about 10,000 plus merchants, right, that cannot come to them because of the exclusive agreement. I assume that they are saying about Alibaba. So you go to third quarter 2019 for Alibaba, right, if you look at their Tmall, because they say well-known brand, so if they talk about well-known brand, it means Tmall already, okay, because Tmall is usually for well-known brand. So you go to their Tmall, you can see that actually at the point of time, third quarter 2019, right, Alibaba Tmall is about having 10,000 brand, 200,000 merchants. So if you take the 1,000 over the 10,000, it's about 10%. 10,000 over 200,000 is about 5%. Okay, but of course, let's say we be more conservative, make it 20,000. So it's about 10% of the 200,000. And if you look at Tmall, it accounts roughly about 20% of the whole e-commerce sales and 17% of the total group sales.
For Alibaba.
For Alibaba, yeah.
Right. So what you're saying is only a few, like a small proportion of the merchants have exclusive agreements, and this falls under the antitrust investigation at this point in time.
I think people are just worried is that the moment they are not allowed to do the exclusive, right, the customer will just run over to the Pinduoduo or maybe JD.com. But my take is actually the customer will just go to every platform. So you don't expect that whole sales to disappear, right? It just go to multiple platforms only. That's all, right? It does not have a major impact if you really look at the percentage.
Okay.
Right.
Yeah. So the thing with antitrust law is that it doesn't just apply on e-commerce. It also applies on the payment and a few others businesses that owned by those giants like Tencent and Alibaba. So one example would be the payment. So if you go to Alibaba, right, when you do a checkout, you can only choose Alipay as your payment method. But in China, I think we have WePay, also one of the big players over there. So there's no option for that.
You can only use Alipay on Alibaba.
For Alibaba platform. And the same thing for WeChat. You can only use WePay. You can't use Alipay for let's say purchasing on JD.com, because JD.com is backed by Tencent.
Okay.
So they are kind of like specific exclusive arrangement between these giant. They are flexing their muscles. Right, so it's kind of like a few camps. A big one will be like top two, the Alibaba and Tencent.
So is that will be under the antitrust investigation as well. That you should have more modes of payment as well, and not restricted to one.
Yeah. So if they are trying to encourage an open market, then most likely we're going to see an open market in China. This platform have to open up. Okay. Not just Alibaba, but everybody like
it
Tencent.
Affects every major company in China as well.
So actually, it's actually not really harmful to them, but also it also benefit them in some way because they are able to take some customers from the
other platform.
The other platform also can take from them also.
So ultimately, I think the biggest beneficiary is going to be consumers, merchants. I think these are the two biggest beneficiary on this end.
So based on this, I also don't think that there will be a sharp decline in sales from their e-commerce platform, because if they are one of the largest e-commerce market, right, e-commerce marketplace in China, let's say they have 80% market share, right, then others will have 20%. Probably 20% will leak out. Right, but it will not be that drastic because sometimes they also gain merchants from other platforms as well.
So I mean, there's still a long list of few things. I won't go into the details, but probably you just mention the government doesn't want people to sell the products below the cost price in order to beat out the competition.
Okay.
Yeah, so they kind of like giving out rebate, discount, selling their product at a very cheap price, and they also sell same item at different prices across different platforms. So it's too confusing for consumers at the end of the day. And this is also one of the strategy that for them basically to weed out the up and coming e-commerce
it makes it very hard for new entrants to come in. Because you're basically priced out by the big boys. They can afford to sell you stuff cheaper.
So the investigation are still ongoing. I mean, there are few fines that already I think shown up on price irregularities. So those are the things that I think is ongoing. It's likely going to continue. So far the fines are quite small at this stage. We don't see a big quantum so far, but they can fine them up to 10% of revenue.
10% of the annual revenue.
Annual
the
revenue.
Which is big.
Which is quite a bit.
Quite a lot.
Okay. But I think the main question would be, yes, so there's going to be some impact, but you think long-term wise is going to be okay? Because these are Alibaba, Tencent, they're big companies, they're huge moats. So they're going to be around for the foreseeable future.
Also not forgetting, that the Chinese government also want their own companies to be as competitive as the tech companies in the West. So they will not do anything to derail their growth.
They just want them to make sure that they're playing fair. And it builds a better market overall.
I think we have to be clear right now is that the government is not out there to destroy Alibaba. It's out there to regulate them. That's all. Because they just slightly got a bit offhand, and
just slap on the wrist.
You want to pull them back.
In line.
Just do your job.
The so-called the newspaper that is owned by the SOE, the state-owned enterprises, they already kind of say that this regulation is nothing to do with politics. So in a way that they do it because for the open market, better market for
the health of the economy.
Not so much on the Jack Ma comment. Well, we all thought that it started from there, right? But again, I mean, they can always tweak the message as they want it to be.
So I guess the impact is going to be temporary. You could say that.
We see antitrust everywhere, right? I mean, in the US,
Google is facing it.
Facebook, they all get fines. I think it's quite a common thing. So I don't think it's going to stop them.
All right. So the share price has come down. I think it was 210. Now it's about 230. This is the US price for Alibaba. So I think the question will be among investors, those who are looking at Alibaba, is there an opportunity to look at it? Because it's quite a sharp drop. If you look at the peak to about where it is now, it's about 30%, which is a pretty good discount if you're taking a look at that from that perspective. So is there an opportunity to have a look at?
So looking at the valuation, actually, I was looking at a cash price to cash flow, basically. So during the pandemic, right, actually went down to about 17 times cash flow. This is like the bottom range. And then after the top range, right before Ant Financial, Ant Group is about to IPO, it actually went up to around 29 times cash flow. But right now we're at 21.6. So I think it's quite a good reasonable valuation, trading at around quite a
So the main drop, of course, I think because I guess the biggest thing is going to be the Ant Group, right? IPO that got pulled out last minute. That actually constitute about, is contributing earnings to the Alibaba as well, right? So that is also one of the factors perhaps caused a big drop in the market. And that accounted for the first half of 2020, accounted about 9% of the non-GAAP earnings, right? So let's say assuming that, Ant Group, because now is really in a big trouble, there are a lot of regulation going on over there, they might potentially slow down in terms of earnings, or in fact perhaps also get eliminated some of the businesses. That's the question mark that I think investors are not very sure. Right? So for investors who are afraid of the Ant Group, I think what we can do is very simple, right? Take out the whole earnings of 9% from Alibaba, bottom line, and then you can use it as your assumption basis for your intrinsic value, whichever kind of multiples that you're using.
So you're just saying that you just remove Ant Group entirely.
Yes.
It's like not part of the business, and then you value Alibaba based on that.
So you just reduce that by 9%. I think that will be a very conservative approach. To eliminate the whole Ant Group risk altogether.
But as of now, the price to cash flow is about just 21, which is right in the middle of the range. If you're looking at the peak and the recent trough. Right. So would you invest at that valuation for yourself personally?
I think it's pretty good considering, like, if taking into account removing that 9%, I think it's still a good valuation. And of course, if they were to release again down the road, of course, maybe might not be as profitable as they once were. So I think it's a bonus in a way. It's a bonus.
What about you, Victor?
For me, I just going to wait it through first, because I'm looking back to how the Tencent was being regulated for the gaming also. So it takes some time, and eventually it drops. We bought, but eventually it drops even lower. So I'm not in a rush to look into Alibaba, but I hope for I'm quite greedy lah. I mean, I'm looking for a better price lah. Right. So yeah.
So he's a cheapskate. Okay, but it's good for investing.
Yeah. So personally, for me, when it was announced at that time, the news of antitrust, there were quite a series of bad news that are affecting the Alibaba now. So there was a big overhang in terms of share price. So I still remember on the eve of Christmas, Hong Kong market actually closed. Alibaba was down by high single digit, and then subsequently the US market opened for half a day, and then I saw that Alibaba was down by 16%. Right, so that was quite attractive, and I just went in and bought.
So you bought?
I bought, yeah, because Alibaba is still, I mean, despite all this bad news, you still have to accept the fact that they are one of the biggest players in terms of e-commerce in China. Their cloud business is also the biggest players in China, right? And it's growing really, really fast. I mean, the future is all about cloud, right? Yeah, and Ant Group is going to be a, 4D, who knows, after they restructure everything, they decided to re-IPO again in the future sometime. I mean, this is going to be a bonus. I'm not going to take this into account. That's going to be a kicker for the shares, the price in the future.
All right. So for people who are looking at Alibaba, this could be a good time to have a look. But for those who just want to wait a bit, Victor is happy to wait for a better price.
There's always opportunity.
Yes.
So again, investing is always a personal decision. Again, not a recommendation to purchase or sell any of the shares. We mentioned during this roundtable. So make sure you make your own due diligence and make your own decisions whether something is worth the right fit for your portfolio. So I think that wraps up our discussion for Alibaba. So thank you once again for joining us. Again, I have Victor, Rusman,
thank you.
Kenny, you are the fifth person, so there are four of us. So thank you for joining us, and we'll see you around. Again, if you like this roundtable discussion, make sure you hit the like button. Tell us whether you like this new format, because in the past we kind of did this Zoom style kind of interview, but now I guess maybe this is a bit more personable. Easier to discuss. Tell us whether you like it in the comment section. And again, if you have any anything to share about Alibaba, feel free to share your thoughts as well. And subscribe to our channel. We have a lot more roundtable discussions in 2021. We want to make sure they get them as fresh as they can to you. So once again, thank you so much. My name is Adam. We're all from the fifth person, and we'll see you around.
Thank you.
See you.